Do you know a fact that in the last financial year, that is the financial year FY 24-25, the India's gold import bill stands at $52 billion. In the preceding year than that is the gold import bill was standing at around the $43 billion. Precede to that $35 billion. That means the India's gold import bill has been increasing. Okay, or if you look at, I mean, we know very simple fact: the price of the gold is on the constant increase. For a simple one, if you look at the price of gold at the end of 2014, it was around 25,800. By the end of 2024, the gold has breached 75,000 rupees. That means the gold has almost tripled in a span of 10 years. As the price of the gold is going to increase, the India's gold import bill is going to increase. If the import bill is going to increase, the current account deficit is also going to increase. So what has the government done to reduce this gold import bill? Okay, the government launched an initiative called as the gold monetization scheme. But the gold monetization scheme, launched in the year 2015, was recently discontinued in the month of March 2025. Hello, all. Welcome to Universal Group of Institutions, Bengaluru. In this particular initiative, the video session, we are going to discuss about what are the features of a gold monetization scheme, why the government has discontinued it, what are some of the detailed features of this particular initiative. So let us quickly start with this one, because the UPSC has the habit of, this year the people were expecting a question on the gold monetization scheme. But we know very clearly, whenever any topic is very, very hot, UPSC never asks such questions. So those questions, will be, post forwarded to the upcoming years. So this question is also very much important for the RBI Grade B examination, or even the NABARD Grade A and Grade B examination. So, keeping in mind about the importance of this topic, we have decided to discuss about this. So, what are the features of gold monetization scheme? First one, remember very clearly, there is no, the something called as the minimum deposit. The minimum deposit at one time is 10 gram of raw gold. Remember very clearly. Is there a limit on the maximum? There is no maximum deposit limit. And there exist three types of deposits under this scheme: the short term, medium term, and the long term. Recently, the government has scrapped the medium term and the long term. The only window that is existing under this scheme as of now, that is the as of now May 2025, is short term only. Again, this has something called as the lock-in period. The lock-in period depends upon the type of deposit. For a short-term deposit, it is a 1 year, medium term 3 years, and the long term is the 5 years. And what type of gold can you deposit here? Jewelry, coins, gold bars, excluding the stones. If your jewelry is containing any stones, such stone will be returned to you, and because the jewelry will be melted into the form of the gold bars. So let us look at the tenures, which is important from the examination point of view. The first one happens to be the short term deposit. Tenure is 1 to 3 years. What is a lock-in period? Lock-in period is left to the bank's discretion. So the bank will decide what is the lock-in period. Now the second one, the medium-term gold deposit. That is, the tenure is 5 to 7 years. What is a lock-in period? Lock-in period is a 3 years. Long-term deposit, 12 to 15 years. What is a lock-in period? Lock-in period is the 5 years. So remember the lock-in period, 3 years, 5 years, whereas the tenure happens to be the 12 to 15 years. And remember very clearly, the short term gold deposits are accepted by the banks on their account. whereas the medium and a long term is on behalf of government of India. As I said very clearly, because government wants to reduce the import bill, and it wants to mobilize the existing deposits held by the household. Because this survey, one survey clearly says that the household gold, that is around the 24,000 tons. So the gold held by the Indians amounts to more than 24,000 tons of gold. So they wanted to mobilize even a 10% of this particular fraction of gold, that would amount to 2,400 tons of a gold. So now, gold monetization interest rates, the, as I said very clearly, the short term is for a bank. So bank has a discretion to decide. Medium and a long term interest rates, for medium it is 2.25% per annum, for long term it was a 2.5% per annum. As I said very clearly, this these two categories has been scrapped by the government. I mean, these are not continued, so this particular has been stopped. So earlier, when it was operational before March 2025, the interest rate that was offered was 2.25. So interest rate here was the 2.50. Who used to decide? The government of India, because the interest was paid by the government of India. You need to remember this very clearly. Even though the gold is deposited with the bank, the interest amount was given by the government of India. Next, eligibility, who all can invest in this, even to the now, even for a short term as well. Individuals, Hindu undivided family, proprietorship, partnership firms, the companies, trusts, I mean the charitable institutions, as well as any central government or a state government institution as well. And moreover, the gold held by the two to three part individuals collectively can also be the deposited here. So, which are the banks that are offering the gold monetization scheme? State Bank of India, ICICI Bank, Bank of Baroda, India Overseas Bank, HDFC Bank, and the Punjab National Bank. These are the banks which are offering it. So, the next important one, the repayment method, how the gold is being repaid. See, on the prince, I mean the on a maturity, the gold, I mean the gold that you have deposited either will be repaid in the form of prevailing gold rate, or in the form of the gold. So similarly, whereas the interest rate will be paid in cash only, that is the Indian rupee. Interest rate will be paid in INR based on the value of the gold at the time of a deposit. If you are withdrawing it, whatever the prevailing rate that will be given to you, with regard to the interest rate is calculated on the value of gold that you have deposited. So whatever the prevailing gold rate at the time of deposit, the interest rate will be calculated. So what are the benefits of this? See, gold storage with return. If your gold is lying in your household, or rather than keeping it in the bank lockers, and moreover you need to pay the locker fee, here under GMS you don't need to pay any locker fee. In fact, the bank is going to give you the interest on that. So next, encashment of gold at the time of, I mean, there is this always flexibility, whether you want to encash in the form of, I mean, whether you want to encash in the form of rupee or in the form of the gold. But if you are withdrawing before the lock in period itself, the repayment happens only in the form of the cash. Remember this very clearly. So there was this flexibility. There is no need to invest in a gold or in any form of the GMS. The institution can invest in the form of gold coins, bar, jewelry, so anything, and there is no maximum cap as well. So, and moreover, the principal amount, the benefit that you are gaining, and the interest rate, there is no tax will be imposed on that. That means tax exemption that exists. One of the best features of GMS is that there is no need to pay any kind of a tax on a capital gain on the profit of an individual or an institution make under the scheme upon the maturity as well. So that means the principal amount as well as the interest is exempted from the taxes. So that's it in this particular video session. Do like, do share. If you have any concerns, do let us know in the comment section. Thank you.